everyone. Welcome again to another exciting webinar with Journey Home Mentorship Program. I'm so excited that you're here. We're going to get into a very exciting, juicy topic about money and how to afford medical education. It tends to be an intimidating topic and cause some emotions like fear, anxiety, but I do want to encourage you to look at it as something that you can overcome. In fact, a major characteristic of a physician is determination and tenacity. So whatever the perceived difficulty that you may think you may have in, financing medical school or even paying off your loans, I want to encourage you that it can be done. All right, so let's get into it. All right. Okay, so our objective today is to go into the details of how do we pay for medical school, how do we essentially manage our loans, and we'll go into the common mistakes that medical trainees and even professional doctors make in their career. Now, this can benefit just about anyone that's interested in medicine. If you're a parent of someone that's looking into medical school who is already in medical school, this webinar is for you, especially for those who are in training and those who are already out of training and getting ready to establish themselves financially. Now, we are not a financial institution or a financial advising group. We try to present the information as accurate as possible, but do use it with your discretion. And we do advise that you seek your own professional advisors for financial matters and so forth. All right, so let's face it, medical education is very expensive. There's no two-way around it. There's several costs that has to be covered, the cost of the training itself, the tuition, insurance fees, supplies, technology fees, examination fees. It's quite expensive. So let's talk about the details here. So in Canada, the average Canadian medical school will cost an average of 200 to 300,000 Canadian dollars total. So that includes your living expenses, tuition, etc. Now in the US, it can be a little bit more expensive. So you will have to budget depending on where you do go for medical school. You'll have to budget between over 100,000 to sometimes over 500,000, and that only covers tuition and fees only. So it doesn't cover your insurance plans that are mandatory for your training. It doesn't cover living expenses whatsoever. Now, if you're like me and you want to venture out to other schools outside of North America, such as the Caribbean, this can give you a little bit more control over how much you want to spend on medical education. But my only advice here is ensure that the school that you choose to attend to is ECFMG accredited. The reason is the residency programs in the U.S. and Canada require that your medical education comes from ECFMG accredited schools. Now, the last point here is the variation in cost that you see here. It's quite a variation. A lot of times has to do with whether or not you went to a medical school from which you actually reside in. So some medical school cost more if you're coming from a different state or province, or if you are an international medical student, it will cost a lot more, or it can cost a lot more. Actually, some schools don't change their price at all. So those are some options that are available. Now let's get into the meat of it. How do people afford medical school? Now, the Canadian financial options and the US financial options, and also the international financial options, are pretty much about the same. So let's just talk about the elephant in the room. I saw on a social media post where someone posted saying that medical education is only for the rich. And I beg to differ because most people actually cannot afford to pay for medical school on their own. Not many people, no matter how well established you are, have so much money laying around in their personal savings, ready to spend on such an expensive adventure. So I do want to encourage you that, do not disqualify yourself by the numbers and by what you actually may have personally, because most people actually don't have it. In Canada, most people pursue, actually majority of students pursue what we call a professional student line of credit, which is issued through a financial institution. So essentially, as soon as you get your admission letter from from your medical school, you would bring it to a major financial institution, and they automatically treat you far different than the average bank client. And because they know your earning potential once you're done your training, and they are essentially willing to pay for absolutely every single cost of your medical education. And a lot of times there is no need or no requirement for a co-signer. Some people do pursue other options such as private loans. For example, some people do what we call home equity loans. And if you have questions about this, I'll let my or friendly accountant guest talk about this later on. Now, let's not forget that family help is very important. A lot of people are very proud when you are pursuing things like this. It's a great accomplishment to get into medical school and pursue a career where you are essentially helping to save people's lives. So, a lot of family are willing to help you in some capacity. So, let's not forget about asking our families for help. In fact, that's how I was able to supplement some of the cost of my medical education. And then there's personal savings if you have some, or investment that you can use to pay for your medical education. Now, beyond that, there are also government options that you can pursue. So in Canada, there are two options here. Usually, they are linked together. The application process is basically the same. So there's a federal loans option and the provincial and tertiary student loan. So every province have a student loan option. So you'll apply to that provincial student loan, and they will also basically triage your application for federal loans. And this also reduces the amount of private loans that you would need to take out from a financial institution. Now, if you are interested in joining the Canadian Army, they do have a program called the Medical Officer Training Plan, where they essentially cover all your expenses for medical education. So essentially, you can go through school debt free. And then last but not least, scholarships and grants. So there are so many scholarships that are available. There are scholarships for just being a medical student. There are scholarships awarded to medical students with financial needs. Other organizations give scholarships based on, if you're a part of a minority group, or a specific ethnicity, or if you're very engaged in your community, or demonstrate some leadership role in your community. So there are a lot of scholarships in Canada, but not only Canada itself. You can actually qualify for scholarships internationally and bring it back home to pursue your education in Canada. Now, in the US, the similar options are available in the US. So, like I said, most people pursue private options because usually the government options are not enough to cover your medical education. Scholarships are not enough. So, most people pursue private options. Now, in Canada, the professional line of credit and even the loans are usually come from major financial institutions. But in the US, the loans itself usually are issued through private companies themselves. And also, there are some medical schools in the US that actually issue private loans. Similarly, like in Canada, some individuals actually choose to do their own private loan options through home equity loans or home equity line of credit. And actually, this is actually a cheaper option because usually the interest on home equity loans or home equity line of credit is a little bit more cheaper than private company loans. And as I said before, financial family help and personal savings is something you should explore. Now, similarly, government options in the U.S. are available, such as federal aid loan. And so the first step is to submit an application online for federal aid assistance, and based on your financial income and your financial status, they decipher whether or not you do qualify and decipher how much you qualify for. Now, both in Canada and the US, it's important to pursue some form of federal loans because there's a potential that some of these loans can actually be basically forgiven by the federal government, and we'll talk about that later on. Now, you can, if you're interested in the U.S. Army, you can pursue their scholarship program. They have a U.S. Army Health Professional Scholarship Program, which also pays for pretty much everything, all of your medical school expenses. And so you really don't have any debt once you finish your training. And likewise, in the U.S., there's actually more scholarships in the U.S. compared to Canada, but likewise, there is so many scholarships that are available in the US and internationally. Now, international students, don't disqualify yourself. So, if you're a student outside of Canada or the US, there are options for you as well. So, yes, you can get private loans or line of credits from your home country, but actually, there are private companies who issue loans to international medical students as well. This is mainly in the US, but the only criteria here is that you need a US co-signer. Likewise, or similarly, I should say, medical schools who issue private loans also do issue loans to international students. In fact, I went to Ross University School of Medicine, and Ross at the time was in the island of Dominica in the Caribbean. And I applied for a private loan through Ross University. And so this is an example of how, as an international student, I was able to qualify. I didn't need any cosigner, et cetera, et cetera. So do look into these options. Now, U.S. federal loans actually do issue loans to international students. And so I believe you do need a cosigner, but this is also a very good option, especially if you are hoping to eventually settle in the US. There is also home equity loans that you can pursue in your home country, scholarships, grants, and even looking into your own government sponsored options. All right. So at the end of your training, it can be a little bit stressful knowing that you owe so much money. And so, rest assured, like we all go through it, but it can be overcome. There is a way you can manage your loan such that you can tackle it and, work towards paying it off. So different institutions have different terms of agreement and payment plans, right? So it's very important that once you sign the dotted line, that you understand what the payment plan is, because once you're done your medical training, depending on the institution, they will require some payment of some sort. But some institution actually do allow you to defer payments. And what that means is postpone payments and they usually qualify you for that if you're still in training. So, for example, you're done going to finish your residency and you're moving on to fellowship because now you realize you want to be a cardiologist. And so, knowing that you have that option will allow you to basically continue your training without being so stressed out about needing to pay now the principal and the interest on your loan. But do be aware, as every time you postpone payments, the interest do accumulate, and you do end up paying more at the end. Um, Now, some institutions do require that throughout the whole training process, beginning to end, you must pay at least interest only. And so being prepared for that is very important, and budgeting accordingly is very important. So please do be aware of the agreement that you signed. Also, a lot of the institution, including the federal loans, give you a grace period. A lot of the times it's 6 months. So after you're done your complete training and you're looking forward to now finding a job or starting your role as a doctor in the community, you have 6 months to start paying both the interest and the principal. I talked to you about military options. They have a pretty good program both in the U.S. and Canada, where your entire medical training is covered completely. And I also hinted that federal loan forgiveness is possible, actually both in Canada and in the U.S. Another small note here: it's so important to read between the lines because it makes a huge difference. For individuals who start off having a line of credit, some institution, as soon as you're done your training, convert that line of credit to a private loan, and you end up having a higher interest loan on your hands. But if you're not aware of this and you're caught off guard, it's not a great position to be in. But these things can always be negotiated with your bank. So please be aware of this. I can't stress enough that preparation is the key here. Having a plan is the key. Knowing about your options is the key. And so I do want you to take back from today all the information and ask yourself, what can I do now to better myself for the future so I'm not surprised by big costs and expenses that I can't manage on my own. Getting more financial education, improving your financial literacy is key. Um, if you just rely on someone else to manage your finances, chances are you're going to be losing money. um, and you're going to be making decisions that you really personally don't agree with if you truly understood what you were doing. And so, increasing your financial literacy is key. So, I do encourage you to learn a little bit more about how loans work, how line of credits work, and how does it affect your credit, et cetera, et cetera. I mean, it may not affect your ability to, let's say, actually, it may affect your ability to own a home if you have bad credit, for example, or you have so much money, so much loans, that the bank is not willing to give you a mortgage. So actually, these things have very significant consequences. And delayed gratification. I mean, I know it took a long time. Like for after about the 7th year, the 10th year, you just can't wait to just have the car that you've been wanting to, like have a car that actually works, you know, or go on vacation, just be a human being. But it is worth just postponing, even if it's a year, 2 years, 3 years possibly, to focus on targeting those loans as much as possible so that you're not paying so much. And now I want to invite our guest, Trevor John Doe. So he is a dear friend and a chartered professional accountant. He is the founder of WJ Professional Corporation, and he'll be telling us about the most common reasons or the most common mistakes that medical trainees and professional make, in their medical career. So I just want to invite Trevor. Hi, Trevor.
Dr. Simone, good to see you. Thanks for the invite. Appreciate it.
No problem. So I'm gonna pass the mic over to you, and you tell us tell us how to avoid these mistakes. Tell us
No
how we can
problem.
keep money in our pockets and not and stop hemorrhaging money.
No problem. I got you on this one.
All right.
So thank you again for the intro. I will let the intro speak for itself, and I'll just get right into it. I've got a few minutes here, and I will start with point number one. One of the biggest mistake that I find medical professionals make is they don't realize that they're a business. So what do you mean by that? If you're a doctor, you're not a business. You're a doctor. Well, taking apart the thing, well, let me put it this way. If you are earning a lot of money, and doctors usually do, people in the medical field usually do, you are by definition a business. You earn revenue, you incur expenses, you have a profit, and in Canada you are allowed as a doctor to incorporate. What that means is, you can either perform your duties as a incorporation, or you can choose not to. And doctors, unfortunately, is a couple of professions that they make a lot of money. Doctors are one of them. That for whatever reason, there's no accounting training, there's no business training, there's none of those courses are in their course load. So unfortunately, we do see a lot of medical practitioners come through our office, and just like you said, Dr. Simone, their financial literacy is not clearly, if it compared to myself, not anywhere close to myself, and that's not the point. The point is, though, as a medical professional, you want to make sure that you have some basic financial literacy so you can ask the question. So the first thing I find doctors and medical professionals make, the first mistake is that they don't realize that they're a business. They're going to make a lot of money. They're going to earn a lot of money. They're going to have investments. They're likely going to have corporations, but they don't realize that early enough so that they can plan for that. Here's what I mean. Second point, not getting proper bookkeeping advice. Let's just say you're out of medical school, you're working, and you decide you'll do this as a sole proprietor, and you've got revenues, you've got expenses, but you're not tracking any of it. Bookkeeping is just tracking all your income, tracking all your expenses, making sure they're in the right categories, in the right spaces, so that you can give it to your accountant so that your tax returns can be filed properly. Not doing so could cost you a lot of money, vis-a-vis allowing or making you pay more taxes than you should have paid, or have you miss out on taxes that you could have saved. So the bookkeeping advice, mainly because let's say you don't have or you didn't keep receipts, it could be a really big expensive problem. The other thing that I find is that I see that this is less of a concern for doctors, because they do get the advice, get a CPA, but sometimes they do it too late. So what I'm saying is that, getting a CPA on your side is very important, because you want to know, should you incorporate? Why should you incorporate? When should you incorporate? Effectively, all we're saying here is that if you fail to properly plan, effectively you're planning to fail because it's going to cost you a lot of money. So we want to minimize that. So getting a proper CPA on your side who can help you to navigate the financial affairs of you being a business all on your own, they will absolutely be able to help you to get the details surrounding what kind of bookkeeping strategies you should implement. And maybe the strategy is you're horrible at bookkeeping. Don't do it. Get a bookkeeper. And that's perfectly fine as well, right? But you have to start thinking like a business person, because you're a full-fledged business. And the other part is, there's a lot of, as Dr. Simone, as you've mentioned already, there's a lot of debt that most medical practitioners come out of their training with, but they don't realize that in a few short years, given their earning potential, they'll pay that off with the right plan. Of course, they'll absolutely pay that off, and they don't start planning for what happens after that sooner, and therefore they do miss out on a few things. So what I mean by that, um, things like, what do I do with my money when I start making money as soon as I get out of school? If the idea or if the plan is to incorporate, what do I do with the excess money that's in my corporation? Do I get a holding corporation? Do I get a sister corporation? Do I invest in real estate? Do I invest in the stock market? How do I buy my first home? How can I utilize a corporation or me as a business to tax efficiently buy my first home. And this is where the CPA comes in. So I might be going back to a number of points because they are really, really important and they do relate and they interrelate. Because once you start making money, then maybe the question is, do I need an RRSP? Do I need that first home savings account? How do I utilize them? What if I need a doctor? Do I get a dental plan? Do I get a medical benefit plan? Right? Those sort of things. What if I start my own clinic or maybe I'm a specialist and I hire my own assistants? How does that work? Planning these things out now is a great, great asset. And as you go into this field and you are a business, you will sign lease agreements, you will sign equipment leases, you'll sign rents, you probably will buy your own office space, you'll have cost sharing arrangements. It really depends on what you're doing. And a really good lawyer buddy of mine once said that read your contracts carefully. And I know Dr. Simone, you alluded to that. So I'll say it this way. A lawyer once said that the big print giveth and the fine print taketh away. So read everything carefully. And if you're not convinced about, if you understand about what you're reading, then get a lawyer. You don't have to do this on your own. You don't have to have all the answers. That's not the point. So this is, and coming back to number one, not realizing you're a business, you're going to need a team around you. You're going to need a lawyer. Your office is going to need a chartered accountant. You're going to need a CPA on your side. So keep these things in mind as you get out of your medical training and you become that medical professional. Know that if you set yourself up right away and you set yourself up properly, you'll have a wonderful opportunity to be successful. The other thing, one more thing that I do want to mention is most of our clients that come through the doors that are medical practitioners that are unincorporated, they always say, well, when was the best time for me to incorporate? Should I do it now? Should I do it later? And I always used to say, you should have done it the first day you walked out of med school, because you are a business and you have the opportunity to do so and the privilege of doing so in Canada. So if you're going to be a medical professional for a long period of time, that's something you should have already planned for with your CPA and have all the broad strokes laid out. And all you'll have to do once you start working is execute them when the time comes. So that's really what I wanted to mention. I'm not here to make anybody a business professional right away. Your job is being a medical professional. Do that. And if you find that some of these things you can do on your own, wonderful. But if you find that you can't, I promise you your time is better spent executing your profession, because the time that you will save having somebody else do all of these for you or advise you on these things is going to be very, 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 very important to you, and it's going to give you a lot of success. So I've only got this one slide. That's all I've got. So Dr. Simone, I'll tag you back in. If there's any questions, let us know. But that's really it on my side.
Thank you so much. You remind me of some mistakes I've made along the way, and some of them I look back and I think, oh man, I wish I knew what I know now. But I'll just share one of them. But once I was in residency, making some form of income, I had to start paying taxes, and I didn't have a CPA at that time, so I did what I knew best. I just continued doing taxes in the US and in Canada. And it was really 2 years into residency, I realized that I didn't have to be paying taxes in two countries. And now I'm trying to redo what I've done. And now I'm thinking, oh, it's no consequence to myself. But let me tell you, a big mistake can be a big mistake, but a big mistake can be a really big mistake. So in this situation, I actually had to pay back Canada Revenue Agency money, after they redid all my taxes. So I know a friend of mine who had a CPA during her residency, and she was actually the one that gave me the advice. But had I had this webinar back then to help me out, I would have avoided some of these mistakes. I mean, I paid someone to do my taxes for 2 years. I lost that money, plus I had to repay the government money, all because of lack of knowledge. So,
this is a great point. Let me expand a little bit on this one. If you're going to be in the medical field, spend the money, get a CPA. You're going to save, and that's a great example. You're going to save a lot more money doing it right than you think, because doing it wrong costs so much more, absolutely so much more. And I know, especially individuals that come from the background that's Dr. Simone, you and I come from, it's a scary thing to hire someone that charges a large fee per hour. It's a scary thing. But I promise you, for those who are starting off now or who are looking to go down this path, trust me when I say just do it, because the comfort that you get, the peace of mind that you get, if obviously if you've got a good firm behind you, it's well worth it. And you will find out very, very quickly, it's more scary to have somebody do it wrong or not do it right at all yourself than to pay to get it done properly. It's way more scary the other way around. And to your point, not a lot of people get this advice. So I appreciate you doing this webinar, because it's very useful. It's very, very useful.
Yes. So I want to open up the floor to questions so far before we wrap things up. Any questions from our chat? All right. Okay, so there's a question here that says, can you provide information on where to find international scholarships? So this is coming from, who is asking this question here? Okay, so, actually this information you could find pretty much online. However, we have gathered some information and a list of scholarships for international students. So why don't you send us in an inquiry form on our website, journeyhomementorship.com, and I'll be happy to guide you on that. But the information is there. It's just a matter of doing your research. But we have already done some of the work to put this nicely in a document available for our mentees. So just go to our website and send us an inquiry form, okay? All right, so the next question is, okay, I think this question is for Trevor. What is the approximate fees for a CPA? So
It's a
what,
great question.
first of all, Trevor, explain like a CPA versus like a regular accountant. Can you just help us out, because this
Okay.
is not common knowledge?
All right. So in Canada and the United States, a designated accountant uses the designation CPA. In Canada, CPA stands for Chartered Professional Accountant. So a Chartered Professional Accountant, to get a CPA designation, you have to have a university degree in accounting. You have to pass a number of professional exams in Canada. That process takes a whole year to go through the exams. And I believe currently to get your CPA, you have to be working for, I think, 30 months, so almost 3 years before they can give you the designation of a CPA. So a CPA does, depending on the training, there's a couple of streams that a CPA can get trained in. Uh, I, I got trained in the public accounting stream, which means that we learn to audit, we learn to do taxation, and we do a lot of tax returns every year. We do corporate tax returns every year. We do tax planning for clients. We do wealth planning for clients. We do estate planning for clients. So a good CPA firm should be able to handle all of those things. So let me give you an example. Let's say you and a couple of doctor friends of yours got together and you create a massive clinic. Let's say this thing is huge. Let's say you're making millions of dollars a year, and you go to the bank and you go to the bank and you say, hey, I need a couple of $1 million loan. Here's what we're doing. We're doing A, B, C, D, E, F, G. And the bank says, wonderful. More than likely, depending on the number of the amount of the loan that you are requesting, they're going to ask for an audited statement for your business. A public accounting firm, CPA firm, should be able to do that for you. Not all public accounting firms will be able to do that in Canada, because some of them are licensed to do audits, some of them are not, but we are. So a public accounting firm in general should be able to give you an audit so that you can proceed with the application process at the bank. But a CPA also, in addition to that, they should be able to speak to you as the business owner, as a doctor, to say, what you're doing is either helping you or not helping you to accomplish your goals. So Think of your CPA the same way your patients think of you. You are their trusted advisor for things that are very, very important. We are the trusted advisors for our clients in financial matters. And we provide that comfort to our clients and that accuracy and that guidance and that advice to our clients. So things like, should I buy this property? How should I buy this property? What's the best way to do it? Should I put money into an RRSP for my kids? What's the best way to do it? Should I do it with cash in my hand? Should I do it with my TFSA? Should I borrow it? Should I do a Smith maneuver? Things like that. How do I make the interest on my home tax deductible? Those things are wonderful tax, I guess, maneuvers that can be made if done right. But if done wrong, oh boy, they're very, very costly. So that is what a good CPA does, or should I say a good CPA firm does. It makes sure that they hold your hands along the way with every financial question you have. And, they may not have all the answers to all your financial questions, but at least they should know someone who does. And, if you've been around for a particular length of time, you will eventually, as a CPA firm, find those referrals, and it becomes easy. So that's a precursor to the first question, which is, what does it cost? And the answer is, it depends. Right. So, and that's usually the answer for any taxation question. What if we do this? What's the tax treatment? Well, it depends. The reason why it depends is because, every CPA firm will pick their own prices. They'll charge their own rates. It all depends. If you have a CPA firm that is downtown Toronto, you're going to pay that Toronto rate. Versus if you have a CPA firm, let's say, I don't know, in the country, for example, it's likely going to be a cheaper rate on average. Not always, but on average. If you've got a CPA firm that specializes in certain things that you are very much interested in, then that fee might be a little bit different. So on average, let me just speak high level. Let's just say you're an average, I don't know, family doctor, and you see patients and you're incorporated. You're looking anywhere between, I'm going to give you a wide range, $2,000 to $5,000, maybe a little bit more, depending on what you want for whatever it is you may need on an annual basis. That does not include bookkeeping. Some CPA firms will offer you bookkeeping as well as all of this other tax planning and year-end administrative requirement work that you will need to get done. Bookkeeping, again, it depends, right? It depends on how many transactions you have, how complicated your bookkeeping is, how many bank accounts you've opened, whether you are a sole proprietor or whether you're a corporation. It really, really depends. But in your profession as a medical professional, shop around, find it. You'll find what the price is at the time that you're looking for a CPA. You'll find the prices are going to be pretty reasonable and pretty comparable right across the board. And seek advice. You've got Journey Home Mentorship here. Seek advice there and go from there. So it really does depends, but broad strokes, you're looking at least a couple $1,000s for a good CPA. Now, that being said, they are bookkeepers who do say that they do all these things. And there are some that are very good. I found very few of them to be very good. That's not a knock on any bookkeeper. Bookkeepers are bookkeepers. They're very, very good at what they do. We need them, they need us. But we do I have had encounter where some bookkeeping practices have, said to their clients that they can do what we're doing. And they just can't because they're not trained that way. And we've had a number of clients come to us after they've been clients of a bookkeeping practice. And when we get the file, they've done a lot of things that are just incorrect. Sometimes, and most of the time, they've resulted in the client paying a lot more taxes than they should have because they're just not as informed about the tax rules as we are. So there's a difference between having a bookkeeper do everything for you versus a CPA do everything for you, but they're both useful at their time. Bookkeeping is bookkeeping. When the bookkeeping is done, you bring it to your CPA to do the year-end work, to do your tax planning. That's the key difference. Bookkeepers accountants, CPAs can do bookkeeping. They usually don't, but in our firm, we do have a bookkeeping department. I don't do bookkeeping. You won't want to pay me to do bookkeeping. I'm too expensive. But we do have a department that does that, and once they're done, we take it from there. So ask those questions, find out what's going on, and be informed because for lack of knowledge, you can perish. So please be informed. Inform yourself, educate yourself on these matters, and just ask the right questions.
All right, thank you so much for that. So, all right, so in summary, you're saying having a CPA, of course, is important, but a bookkeeper, um, plus not just a bookkeeper alone, plus an
Mhm.
accountant is important.
In,
Um,
in in the field that you guys for the medical profession, absolutely. A bookkeeper is not going to check all your boxes. You've got too many complicated things going around. You got too many dollars going around. Let's just be honest with that, right? And you want to be able to plan your life the right way. You want to be able to plan your goals the right way. And the training that we have as a CPA, we see hundreds of clients a year, hundreds. So we can definitely evaluate if, this idea is a good idea versus that idea, but we also see the execution of our plan every single year. So having a good CPA on your side that has the experience in that industry is vital.
Yeah, that's some good advice. So, this reminds me, now I know who asked that question about the scholarship. So, I forgot to announce that actually the first two individuals that signed up for this webinar will be given a one on one consultation with myself. So, Mary, you're one of them, and France. I don't know if he's here, but you will receive an email from Journey Home Mentorship, and we'll be happy, more than happy, to walk you through the questions you have and spend some one-on-one time. Okay, so prepare your agenda, and it's gonna be pretty good. So looking forward to talking to you. All right. So I saw one question here. Where can I find a bookkeeper? Is it just a Google search, Trevor, or maybe start with your accountant and they give you some advice?
Absolutely. If you've got a CPA firm, start with them. They always, I don't know of CPA firm that does not have a good referral to a good bookkeeper, but I will say good bookkeepers are becoming hard to find. I'm not sure why. I think they're probably retiring and leaving the industry or something like that. But definitely start with your CPA firm. But look at the reviews as well. And if you're ever not sure about if your bookkeeper is any good, ask a CPA. Say, this is what my bookkeeper is doing. Is this any good? They'll tell you, right? So
Mhm.
it doesn't have to be too much of a rocket science.
Okay, I want to address this question that was sent by Diane. She was asking, is it better to start paying off loans immediately or wait until after residency? That's a really good question, and I kind of hinted at that during the presentation that the sooner the better, especially like if you have the capacity to pay even the interest alone on the loan just to keep the principal the same, that would be in your best interest. The more you delay payment, the more expensive it's going to be. The other question that Diane had, she asked, how do interest rates affect my student loans during residency? Um, it differs from it's a different policy among different institutions, private versus the public institutions, like the banks, the common banks, Bank of America, compared to Royal Bank of Canada. They all have different policies, but the interest rates typically in the US tends to be a little higher. They have some flexibility, like similar to mortgages. They have like fixed rates, variable rates. In Canada, here with the professional line of credits overall tends to have lower interest rates compared to other private loans, and so usually it's a standard rate. It may fluctuate, but it's pretty standard. And so a lot of the banks here in Canada require interest only payments, at least during your medical education. It's the bare minimum, so you can always pay more. But as I said, no payment, if you ever have that option, is not always in your best interest. Um, Sasha asked a question here about how do I learn about grants that are available in the U.S. And as I said, there are a lot of options in the U.S. I mean, within a state, there's so many options. I mean, if you are a person in a minority group, um, a mother, for example, or a parent, if you're from the Caribbean or from a specific country, there's so many organizations that are willing to just give money away, even just simply being a medical student. So it's all there, it's all online. But if you want the specifics, we have a Journey Home Mentorship community where we have resources such as this that will be available to mentees. And so that's a way to access it if you want it, if you need a starting point, just a list to start with. But you could also do your individual research. Another question here from Haley. Haley's asking, how do I afford medical school basically without taking too many student loans? And that's a good question. We went into this during the presentation, really trying to supplement those loans with scholarships and federal loans, even though they're loans, the fact that you have a potential of having them forgiven, meaning you don't have to pay anything at all, really does offset some of that financial pressure. So I would say trying to qualify for federal loans and scholarships as much as possible would be your best option here. And, making sure that you keep that principal stable, that would be my best advice. Now, I think this question is probably for Trevor from Diane. She's asking, what are the common tax deductions medical professionals overlook?
That's a broader question. I would say this is not just limited to medical professionals. I would say this is probably wide based to anybody in business. And I don't think I have a specific one, but I will say that to avoid missing anything, have a CPA that you know that is good, a CPA that you trust, and be transparent. Because the answer to your question is something that you probably don't even know. Here's what I mean by that. In having conversations with clients, they are telling me about their day, they're telling me about, their job, they're telling me about what they're doing, and things come up in my head to say, hold on a second, you didn't tell me that before. This is kind of important. So to them, it's inconsequential, but to us, because this is my world, I do this every day, it's kind of important. Let me give you an example. Let's say you're working at a clinic and all of a sudden, midway through the year, you decide that you're going to work at a separate clinic. You're not changing clinics. You just get another one. So in conversation, you may say, you know what, you're talking to your CPA. Yeah, I get to the clinic around 9 o'clock, but traffic is bad. So I stay there for about 3 hours and then I go to the other one. And then your CPA, if they're good, they might say, what other one? Because your travel between one clinic and the next is a tax deductible travel, but your travel from your home to the first clinic is not. So you may not have realized throughout the year that you are, now changing your situation. So to answer your question, I would say just be transparent about everything that you're doing. And you will find that a good CPA will just pull that information out of you. There is a standard list of the most common tax deductions that are available on the T2125. That's the tax form for income and expenses for a business. I'm not going to go through that because they're standard, but the ability to recognize them is kind of important. Okay. So talk to your CPA about that, talk to your accounting firm about that, make sure that it's transparent. And Dr. Simone, if you don't mind, the last couple of questions, someone asked about paying off loans and interest. The only thing I want to add to that is, and your response is correct, if you've got the one loan, but if you've got more than one loans or more than one debts, the answer usually is whichever one has the highest interest rate on it, pay that one off first. Okay. So I think Dr. Simone, you mentioned this as well. Read the fine prints. Find out what happens while you're a student or in residency, and find out what happens when you're done. Find out those timing differences, because you may also have an opportunity to consolidate some of those things after you graduate. So pay attention to those fine prints, because they may hit you with a balloon interest rate at the end because, hey, you're done. You want to be able to go to the bank and plan that ahead of time to say, before this thing happens, let's refinance this, or let's change the product, let's put it into this thing, and then we go from there. Okay.
I do want to add that you don't have to take no for an answer.
Oh yes.
Yeah, not everyone that you present to at a financial institution or a private company is essentially equal in terms of their experience. And so, if you find that you're not getting the help you need, just move on and try and find someone else. Like sometimes it's you finding the right person to talk to that can help you because it is possible. So don't always just take no for an answer. And also to add to what Trevor is saying, as physicians, we're busy. Like, who has time to know all these details about taxes and this and that? And even if you're not a physician, life gets busy. Like, we don't have time to go through the fine print. It's a very serious thing if you mess up your taxes. But it's painful also if you're paying too much money to the government. So it does. It's worth it having someone on your side that can give you valuable advice. So I hope that answers the questions. And let's see. Uh, Diane is also asking, can you give some quick tips or a glance at how doctors and healthcare workers can effectively plan for estate and wealth transfer? Wow.
Great
this
question.
is
You see,
this is a CPA question.
I like this question because it's exactly what we talked about earlier. You got to start having these conversations even when you probably can't pull the trigger,
Yeah.
right? Because once you know about them, at least when you hit those milestones, you'll recognize, hang on a second, I've heard something about this. I should probably ask my accountant something about this stuff because we're here now. And Diane, that's a great question. The answer to your question right now would be it depends. Here's why. Estate planning depends upon, effective estate planning strictly depends on the type of assets we're planning for or with. Let me give you an example. If let's say you've worked, you're elderly, you're planning to transfer all the assets you've worked so hard for, the most common asset people have is their home. Okay. And there's not a lot of tax planning that you can do by and large, generally, that you would need to implement to transfer your home. But if you are like a number of our clients who've got multiple corporations, and in those corporations you may have real estate, in another corporation you may have stocks, bonds, a mutual fund portfolio. You may have your operating company in a separate corporation, and maybe you'll have some other stuff in a holding company. Okay, then the tip that I will give you is make sure you talk to your accountant way ahead of time. Okay. Um, right now, I would say if you don't have a will, no matter how old you are, get one. Okay. Because if you don't have one, it gets complicated. It could get really complicated really, really quickly. I don't want that to be the case for anybody. And, sometimes you may think, well, I'm too young. I'm not going to get a will. Unfortunately, I've had to deal with clients who, in their early 40s, they come into my office and they say, we went to bed and all of a sudden one of us woke up the next day, one of us did not. They've got kids, they're all small. These things do happen. They're not clearly they're not the normal, and I hope that they don't continue to be the normal. Sorry, I hope they don't ever become the normal, but they do happen. So estate planning is having that difficult conversation, not just with your accountant, not just with your lawyer, but also with your family members, right? So especially if there's kids involved, who's going to take care of the kids? What happens if this happens?
Mhm.
If you've got a large estate, meaning you've got a lot of money, a lot of wealth, a lot of assets, is that going to the kids right away? Should it go to the kids right away? Do they go to the kids when they're 18, 20, 25, 30? You can dictate that in your will. You can make that part of the conditions of your estate for transfer. You can open a trust to govern that and have a third party be the trustee. Most banks would be willing to offer you that service for them to be the trustee to handle your estate until your beneficiaries, for example, your children, reach a certain age. Um, you can also plan the taxation that could come on your passing through insurance products or donations directly in your will. So Wonderful question, but the answers are very, very broad and they could be very, very specific given your situation. So, as with anything tax, the answer is it depends. So,
Mhm.
please have that open conversation with your accountant.
Yeah. I mean, I think in our training, we're so focused on the goal of
Yeah.
finishing well that we have oftentimes left behind some of the other important things in life. For example, um, in both the US and Canada, the housing price have gone up, right? But substantially in Canada here. And so I know it's not uncommon to hear that, you know, the younger generation is not able to is struggling to own their own home, but believe it or not, professionals are actually including doctors actually are having a hard time trying to figure out how to get into a house. So think of it like if you had the right information even as early as residency, you're making some form of income, maybe having a plan as to how you will be able to afford or get into your home, or maybe even investing in a property like a, you know, pre-construction, so that by the time you're done, you're set and you're not struggling and catching up with the increase in prices over the years. So there's a lot of things that you can do, and I want to encourage people to just be open and get the help you need, and if you have to pay for the help you need, it is worth it.
Let me take you one step further if I can, Dr. Simone. I think you and I may have had this conversation actually. If you're going to be buying a home in Canada and you're looking for a mortgage, you are doing yourself a service to understand what you would need to qualify for that mortgage a couple of years before you actually execute that purchase. Let me give you an example. If you're a medical practitioner, and let's say you're a couple of years out of residency and you're unincorporated, and let's just say in 2025, in 2024, you're unincorporated. Now it's February 28th, 2025. And you say in 2025, I want to incorporate. So my first question to anybody trying to do that is, hang on a second, do you have any big purchases coming up vis-a-vis, do you want to buy a home? And if the answer is yes, I may tell you that's not a good idea. Here's why. If you have self-employment income in 1 year, in 2024, and let's say you've got either dividend or salary income in 2025, and you want to buy a home in 2026, let's say summer, your mortgage broker is going to say, show me your tax returns for 2024 and 2025, and they're going to take an average of the same type of income that shows up on your tax returns. So if in 1 year you've got self-employment income and the next year you've got dividend, you don't have the same type of income in 2024 and 2025. And therefore, when they take that number and they average it, they're not going to get enough that you think that you're going to need. So, for example, if you make $100,000 in 2024 and you make $100,000 in 2025, but in 2024 you make self-employment income, but in 2025 you make dividends, you only have an average of $50,000 that they can use because the type of income changed from 1 year to the next. So planning that out a couple of years before that happens is a very, very important thing, or could be an extremely costly mistake. So keep that in mind as well.
Okay, that's awesome. There's so much to know, to learn. I can't keep up. So we need you, Trevor. We need you.
No
All
problem.
right. We may have questions for just a few more, and then we have to wrap up. It's been awesome. Maybe we need a part two. uh, so Celeste is asking, what are your thoughts about trust? This is for Trevor.
All right. Again, any tax question, because every tax question that we analyze, it is client specific. So the answer to this one is it depends. But here's some broad strokes. I usually say to clients, unless you have at least $1 million to manage in this trust, it's not worth it. Setting up a trust is expensive. It could be 20, 40, $50,000 just to set up a trust properly. There's ways to do it improperly, and clearly you're going to get what you pay for. But it depends. It really depends on the value of the assets you're looking to put into that trust. It all depends if you've got a trustee that you can trust. It all depends on who the beneficiaries are going to be, how many beneficiaries they're going to be. So there's a lot of very important rules that govern trusts. and you've got to understand them all before you go down that road. So my thoughts about trust is they're useful when they're useful, and they're not so useful when it's just not that useful because they're very expensive to manage. So if you've got a sizable enough of assets to manage, it could be very, very useful, very, very lucrative, and you can spread income around quite nicely. But there are a lot of fine prints to that, and the rules have tightened up over the last number of years. And as governments change, rules change. Sometimes they get better, sometimes they get worse. It all depends. So I will say this: we in Ontario anyway, we just had a provincial election, and we're vying to have a federal election sometime this year. Don't know when. Some people are saying in a couple of months it'll be. Others are saying maybe not so much. Your politicians do directly impact your pocket. I know some people have probably heard that in the past, but when you start working, especially when you become a business owner, especially when you are a business, like we've talked about earlier, your politicians and the government of the day do influence how much you get to keep, if you get to keep much or if you get to keep little. So please pay attention to their policies. Ask your accountant to interpret them for you if you have to. What does it mean? How does this affect you? How does it affect your estate plan? How does this affect your financial plan? These things are all very, very important. How does it affect your ability to utilize a trust or not to utilize a trust? Those rules changed a couple of years ago. The Liberal government changed trust rules significantly a couple of years ago, making it a lot more challenging to use a trust. So pay attention to that. It's very, very important. It does have a direct impact on decision making and planning ability, or should I say, your ability to plan. So I think it's a useful tool if it can be used, but talk to your accountant.
Yeah, and Trevor's, our audience is a mix of people from Canada here in the US. So I want to add to, look into what your state, right? Your state says about trust. And
Absolutely.
so,
Different jurisdictions have different rules. Make sure you are using and analyzing the right rules for your situation. So again, talk to your accountant.
yeah. All right. Well, this has been great. Thank you so much, Trevor. It's been quite amazing to hear your perspective, and we're gonna just gonna share my last slide here. All right. So it's been a blast, and I just want to encourage everyone to just improve your financial literacy and plan ahead, no matter what stage of your journey that you're in. Now, this presentation was put on by Journey Home Mentorship Program, and we're really here to support you along your journey in medicine. And so, if you are just a family, a parent of someone that's interested, we're here to support you. If you are a student yourself, a medical graduate, or you are a working doctor, and you need help, on some really important topics such as what we talked about, just go on our website, journeyhomementorship.com, and fill out one of our inquiry forms, and we'll be in touch with you. We'll be happy to. We have some exciting things on the horizon. Next month um, will be a part of the International Medical Schools Fair at McMaster and York University. So if you are in the Toronto or Hamilton region, we would love to meet you in person. So come stop by. I believe the admission should be free, so just come and stop by. And in the summertime, for individuals that are looking for more clinical exposure, in the clinical setting, we have programs that are there to support you as well. And for any other individuals who just need some guidance, you could book a one-on-one consultation, and we'll be more than happy to help you. Give us a call if you need someone to talk to, or just send us an inquiry form. All right. So for now, I wish you guys all the best, and you have a good night.